As per the March 2021 data, a total of 10.7 million Demat accounts were added between the period of April 2020 all the way to January 2021. This 10.7 million was more than double the total number of Demat accounts that were opened in the fiscal year 2020. Now, do you know what's more interesting? That according to a study that was conducted in March 2020, most of the Demat accounts are still inactive in India. Now, one possible reason for that is that opening of a Demat account is just one part of the entire trading or investing process. For example, be it a trader or an investor, they just become clueless after what to do or what actionables they need to do after opening of a Demat account. For example, take investing. There are almost 5,000 plus listed companies in India. There are so many sectors, so many companies to analyze, and the investor just becomes confused about what to do, and that's why they refrain from investing and they usually prefer traditional investment class. And one of the best way to learn investing or trading is to visit LearnApp.com, where you can find actual structured content from a beginner level all the way to advanced level. But this video is just aimed at to give you a perspective on how to start investing. So just to start with, as a beginner, one simple hack for investing can be to look after for companies or invest in companies whose products or services you use in an everyday life. I mean, you can't delay the consumption or utilization of that product or a service for a very long period of time. Such products or such services becomes part of your everyday life in some way or the other. I mean, take for example tires. Be it a diesel car, a petrol car, electronic vehicle, truck, aeroplane, etc. Tire is an essential product that has to be used in each and every automobile across the value chain. Another such similar example can be wires. I mean, although you are shifting from coal energy to renewable sources of energy or green energy, however, to transport that electricity, you need wires. Wires are a medium to transport electricity, whether to industrial areas, whether to commercial areas, whether to household. And such wire is another essential product that is part of each and everyday's life. And thus, in this video, we'll try to cover two such unique companies in this everyday usage sector. But before moving on to our main video, guys, as told you in the previous video, LearnApp is trying to come up with a video on every Tuesday in which we will try to answer your questions or queries regarding general market, company analysis, or even LearnApp. So I would request you to post your questions in the comment section below. So the first company in our bucket list is Galaxy Surfactants. Now I know many of you might have not heard of this company, but I also know you use the product of various brands like Unilever, Dabur, Colgate, Palmolive, Loreal, etc. So basically, Galaxy Surfactants provides various raw materials to these big MNCs for their final products. So these products are mainly used in consumer-centric home and personal care products like hair care, oral care, skin care, cosmetics, soap, shampoo, lotion, detergent, cleaning products, and what not. This company was started by 5 friends and they have a classic entrepreneurial mindset. Thus, the company provides raw materials to such MNCs that are part of your each and everyday life. Do you know, a very interesting study was conducted by Galaxy Surfactants, and the result of those studies were that out of 10, 9 Indian consumers use products which have Galaxy Surfactants products at least once in their daily routine. So, as I can see here, the company is a leading manufacturer of performance surfactants and specialty care products. Now, performance surfactants form 62% of their revenue, while specialty care products form 38% of their total revenue. Surfactants are the most versatile product in the chemical industry. Like, it caters to the need ranging from the household area all the way to the industrial areas and even pharmaceutical industry. As I can see here, the surfactants market size is projected to reach USD 52.4 billion by 2025 from USD 42.1 billion in 2020 globally. Also, research and development, basically R&D, forms a very important part of this particular industry because company used to continuously come up with new products or new raw materials to be used in the final product. So as I can see here, the company spent a total of 15 crores exclusively on the R&D in the fiscal year 2019-20. Also, a total of 79 patents have been granted to the company since the inception year 2000, and also 14 patents are still in the pipeline. Also, another striking feature we found out about the company was that company is not dependent only on the Indian market. As I can see here, India only contributes 35% of the total revenue, while America, Egypt and Turkey contributes 32% and rest of the world contributes 33% of the total revenue. The company operates through a total of 7 plants, out of which 5 are in India, 1 is in Egypt, 1 in US, and through these 7 plants, the company caters to the needs of 80 plus countries' consumers. And another unique thing about the company is that most of the client portfolio comprises of the MNCs. This usually represents the stickiness of the business as well as the brand. So these were all the unique points about the company. Now let's talk about the financials of the company. As I can see here, the company has consistently increased their revenue as well as their operating margin. And another positive trigger for the company is this whole situation created by the COVID pandemic, because all of us have become aware of health and hygiene products. So that's why it's very good sign for the final products to which company provides raw materials. Although because of this pandemic situation, the prices of fatty alcohol were increased by almost 90%, which is a major raw material that is used by the company management has clearly stated that they are also planning to increase the prices of their products to stabilize the margins. And also, all these strong financials have resulted in a high ROCE of 25.4% and high ROE of 25.6%. And another positive thing for the shareholder of the company is that the company debt to equity ratio is just 0.22x. And you know what's the most interesting part of this analysis is that we have applied the same approach that was taught by Shashwati Chatterjee ma'am in one of our courses on LearnApp.com on analysis of financial statements. If you are interested to learn more on it, you can check out LearnApp.com. First lesson is exclusively free. So let's start with our second company, that is Gujrat Ambuja Exports Limited. Now, of course, we Indians love food, and food items comprises daily part of our everyday life. Be it Kaju Katli, be it samosa, be it puran poi, be it everything. You can't ignore the importance of edible oil. Now let's just look why edible oil industry sounds so interesting to us. Now, do you know the total demand for edible oil in India is 24 million tons. But the sad part is that we produce only 11 tons domestically and 13 million tons is imported annually. And thus Gujrat Export Limited is one of those companies that cater to those edible oil needs of the nation. This all macroeconomic condition just creates huge opportunity for the Indian companies like Gujrat Ambuja Exports to cater to the domestic demand and grow their edible oil business. Another positive trigger for the company is continuously rising of edible oil prices. Now, do you know the rise in edible oil prices was more than the rise in the prices of diesel and petrol? Thus, two positive triggers for the company is to meet the domestic demand as well as the rising edible oil prices. Just to add cherry on the cake and look it more tempting, recently the government of India announced a national mission on edible oils to boost palm oil production worth more than 11,000 crore rupees. The company was started in 1986 and presently they have over 10 production plants set up across the country. As I can see here, the company caters to the needs of palm oil, soybean oil, sunflower oil, mustard oil, groundnut oil, and even vanaspati. And interestingly, apart from the edible oil segment, the company also caters to the maize production and maize processing segment, cotton yarn segment, and even power production. So these were all the positive triggers about the company that makes the company looks more interesting to us. Now let's start with the financials of the company. As we can see here, the sales of the company were continuously increasing Although there was a little slump due to the pandemic, however, the sales shot up again. This increase in sales also has a factor of increasing edible oil prices globally. Another positive thing for the company is that because of this rising edible oil prices, the operating margins of the company is increasing, which is a very good sign for the company. All these strong financials also resulted in an high ROC of 27.22% and an high ROE of 22.7%. And another positive thing for the shareholder is that the debt to equity ratio of the company is just 0.1x. So this was all about Gujarat Ambuja exports. However guys, just a simple word of caution on the company that the company is still a small cap company, which is very risky. The ideal way to invest is to build a portfolio of stocks. Well, to get help on that, you can visit LearnApp.com, where we have various courses and strategies that will guide you to build your own portfolio from scratch. So do visit LearnApp.com, link is in the description below. And also guys, as we discussed in the beginning of the video, we are coming with a video on every Tuesday where we will be happy to answer your questions and your queries regarding general market, any company analysis, or even LearnApp. So please do post your questions in the comment section below. But guys, it's an humble request from our side. Please don't ask for any stock recommendations or any tips because LearnApp doesn't do that. We are solely for the education purpose. And guys, you know we are near our 100k subscribers. So we request you to subscribe our channel and do like and share our channel and watch these two videos. See you in the next video.